Hello and good evening, good morning from wherever you are in the world. Welcome to one of the Stake webinars. This is a portfolio overview of H1 2024. So to introduce myself, my name is Sarah. I head up marketing for Stake.
Hi, everybody. This is Jad. I'm the head of real estate at Stake. Nice to see you.
And today we're going to be giving you a bit of a walkthrough of Stake, a little bit of a back to basics, a walkthrough of the Dubai real estate market and a snapshot of how it's been performing. Then I'll hand over to Jad and he'll walk through our portfolio and how it's also been performing. And then what we can do is we can go on to a Q&A at the end. We can answer any of your questions if we haven't answered any during. You'll be able to see a Q&A box at the top, or it might be the bottom for you. Just feel free to put your questions in there. We'll be answering some of them on the way throughout the webinar, and then we'll also be answering them live at the end. So for those that are new to Stake, who are we? So real estate, when we look at real estate as an asset class, it's very popular. Everybody has a high affinity to real estate, but it's not exactly the easiest asset class to get access to. It can be quite restricted. You need large sums of income, large sums of deposits to be able to buy real estate. It also can be quite inconvenient, the ownership process. There's a lot of, paperwork that's needed. And then on top of that, it's quite an illiquid asset class. Once you're in, you tend to be stuck for long periods of time, and it can be really difficult to, exit that and find new buyers for your real estate. On top of that, there's not much transparency when it comes to real estate, especially in the Dubai market as well. So we are in a space where it's an asset class people love, but it's just not easy to get access to. That's exactly why we built Stake, to really empower everybody to own and build wealth through real estate. So who are we? We're a real estate investment platform that allows anybody from around the world to invest into real estate from low minimums. So on Stake, you can invest from $136, which is 500 dirham. You can do it in a matter of minutes. You can completely diversify. So instead of just buying into a particular property and putting a high concentration into one unit, you have the ability and flexibility to put that money into multiple units and see the benefits. It's fully transparent. We are regulated by the Dubai Financial Services Authority. We're located in the Dubai International Financial Centre as well. So we have full transparency on all of the details when it comes to our transactions. And then on top of that, the beauty of Stake is you can also exit your investments. So you're not just buying in and having to hold for a high number of years, but we have exit windows that happen twice a year, and you have the opportunity to sell your shares onto somebody else in the marketplace. We have rapidly become a leading real estate investment platform in the MENA region. So we've hit an amazing milestone recently. We've now got over 700,000 users from all over the world. Some of our biggest markets are UAE, our home country, but as well as that, Saudi, Kuwait, UK, US, Europe is a big market for us as well. So we're growing at a very, very fast pace, considering we're a 3-year-old startup now. We've got people from 170 countries, 200 plus nationalities, and we are growing at a record rate quarter on quarter. So that means that we've now executed well over $100 million worth of property transactions, and we're paying out consistently close to about 2 million dirham a month in rental income every single month to our investors. So how it works is you invest into a property on Stake. What you do is you get your rental income paid into your wallet every single month. And then, as I mentioned earlier, you have the opportunity to exit the investment. And that's where you notice the capital appreciation as well. Today, we've built a very solid portfolio. Jad will deep dive into all of this later, but we've now got well over 235 properties across different areas, prime locations, predominantly within Dubai. And this is where we really focus as part of our investment strategy. But as I mentioned, Jad can deep dive into this a little bit later. So what we'd like to do is kind of give you a little bit of a look at how the Dubai real estate market has been performing and really what Dubai has in store moving forward. I know we'll have a lot of people from around the world here today. So looking into that, the 2040 vision. For those that aren't aware, the Dubai 2040 vision is really about making Dubai the best city in the world to live in. And this is everything from tourism to infrastructure to business initiatives. There is a huge amount going on when it comes to 2040. On the screen now, what you can see are some of the key incentives and the key metrics that they've got going on within Dubai. So doubling the population is a really big one for us. We're already on track with doubling the population. So we're about 3.5 now, I believe. I'll show it on the next slide. We're set to hit 5.8 by 2040, doubling the amount of green spaces, making sure that we've got land dedicated to industrial, economic activities, and also making sure that we're focusing on that connectivity as well. So we're set to double the amount of metro stations within Dubai, again, making sure people have the connectivity with an 800-meter radius to public transport. When we look at that as well in a little bit more detail, the 20-minute city is a huge part of the 2040 initiative. So the 20-minute city is really about making sure that every single resident can access work, leisure, and healthcare within 20 minutes. So you'll see, if you know Dubai well, you'll know Expo City. Expo is a really fantastic example of this already as a kind of a commuter city. You have everything you need on your doorstep. There's a lot more offices and people moving there. It's easy to connect. Metro's there. And really what the focus is in Dubai is to make sure that we build communities that have this level of accessibility. So when we talk about more green areas, we talk about more infrastructure and metro stations. This all feeds into the 20-minute city and making sure that it's a fantastic place for residents to live. So where are we at with the Dubai real estate market? So since COVID, we have been, on an upward trend. You can see on the right-hand side of the screen, the residential sales transactions since 2018. We are growing year on year and still quarter on quarter. When we look at, the off-plan versus ready, so off-plan are units that are still under construction, ready are ready accessible to live in the market. We've noticed quite a shift in the last really 12 to 24 months where there's a lot more affinity towards off-plan. That's for a couple of reasons. There is limited supply in the ready market of properties that people really want to buy. We've got huge demand, especially coming from overseas investors as well. And developers have been announcing new projects that they held back on, in all honesty, in the years before 2020. But really, we've got developers bringing, very good projects to the market now. And that's why we're seeing a huge growth in the off-plan transactions. If you look at the right-hand side, our off-plan transactions for 2024 are close to what they were for the entirety of 2023. And even when we look at the secondary market in the grey and the ready market, we've already seen a growth on H1 2023. And I think that when we look around the world, there's a lot of economic uncertainty in many different countries. Dubai tends to do very well during these times. We have a lot of tailwinds that propel us in the market. When we look at interest rates, this is definitely something that we're really starting to see now impact different, parts of the world. Dubai has quite a cash-heavy market, not as cash-heavy as it used to be, but it's still cash-heavy. So what this means is these interest rate fluctuations really haven't shown much of an impact. And a lot of the banks here, they're actually absorbing some of this margin as well, so it's not getting passed on to the end user. Dubai, as I'm sure many of you will know, is zero income tax. We have a lot of different visa options available for foreigners. It's becoming more and more accessible and easy to get residency in Dubai. We at Stake offer the UAE Golden Visa and Retirement Visa as well, again, making sure that we can give that accessibility to our investors. When we also look at Dubai and where their focus has been over the last few years, it's really shifting and making sure GDP is not just concentrated around oil. We've done a lot of focus to make sure that, tourism and other parts of the GDP really make up, which now accounts for 70%, which reduces our dependency on oil. And then we look at how we're ranked against many of the cities around the world. By the World's Best Cities report in 2023, Dubai was ranked first regionally and fifth worldwide, which for a 20-year-old, 25-year-old city is a very fantastic place to be in a short space of time. So linking back to the 2040 vision of doubling population, you can see here on the left-hand side our population growth. Now, COVID was our dip. We are a 95% expat population. That's nothing surprised about. We recovered within a year, and now you can see that consistent growth when it comes to our population. And a growing population needs new homes. So when we look at all this new building and new transactions happening, it's required because we need to have well over double the amount of homes we've currently got on the market today to cater to this growing population. So we've had 50,000 residents move in H1 2024. We're expecting even more in the second half of this year as well. One part that's really interesting to look at in Dubai is the millionaire migration, especially into this city. So when we look at luxury end of the market in particular, we've noticed a huge spike over the last few years in the luxury real estate space. But a lot of this comes down to millionaire migration. So last year, Dubai was the second place for high net worth individual migration inflows. So a high net worth individual, anybody that has a net worth over $1 million. Last year, there was 120,000 moved to a different country, with 128,000 expecting to move in 2024. So what we can see on this is if you look on the left-hand side, you can see where people are exiting. China coming out number one, they're expected to lose the most millionaires this year, followed by the UK, India, South Korea, and Russia. When we look on the right-hand side, we can see UAE up there as number one. Interestingly, last year, UAE was number two and Australia was number one. Now, Australia came in first last year because they had a lot of millionaire migration coming from China. Whereas China typically went to Australia after COVID and are now gravitating more towards the UAE market. Since COVID, there's always been a waiting game to see when we see more Chinese investors come back, and we're really starting to see that now, and that will definitely be reflected in the numbers this year. High net worth individuals also moving to USA, closely followed by Singapore, Canada, and Australia. So Australia is still up there, but it's definitely gone down as the UAE has grown. And I think with a lot of the initiatives that Dubai introduced in terms of their visa programs, making business formation incredibly easy and accessible, all of this is lending itself to why more millionaires are moving to Dubai. Now, you can think, oh, how do millionaires infect everybody else? Typically, they're creating businesses, they are investing in businesses, they're bringing more to the economy. And I think what this does is it sets Dubai up to be incredibly positive for the future. Employment can increase, and I think there's a lot of opportunities that can come with this. So Henley do a fantastic report on this year after year, and we follow it closely. So to see UAE as number one is fantastic. So what I will do now is I'll hand over to Jad to do a walkthrough of our portfolio performance. So we've just released our very first report. We'll share the link after this webinar for those that haven't seen it, but it's the H1 2024 portfolio performance for Stake. We will be doing these more consistently moving forwards. So I'll hand over to Jad now to take over.
Thank you, Sarah. Hi, everybody. For those that have joined in the last few minutes or the last 20 minutes, maybe, welcome. I'll be talking you through our portfolio performance and looking at the numbers that we've achieved. So next slide, please. First off, by the end of 2024, or by the end of half one 2024, we reached a big milestone, which is 220 properties under our management. That number is actually currently over 235. So there's been 15 properties added in the last 5 weeks. We have seen transactions growing every year. Could you go back, please? Thanks. We have seen a steady growth of transactions year on year. So we launched in 2021, and that growth has been steady. As I mentioned, so far this year, we've crossed basically around 86 properties, sorry. So we've already achieved the numbers that we've done in the whole of 2023, and we have very ambitious targets for the rest of the year. In terms of value of transactions, there's been a steady growth as well. If you can see on the graph on the side, so far this year, we've achieved, or for half one this year, which is when the report is dated, we've achieved 123 million dirhams in assets under management. That's approximately 73% of the transaction volume for 2023. And like I said, we're looking at that number is currently hovering close to around 160 million. So stay tuned for the next report, which will show a bit more of what we'll achieve in the next quarter. Next slide, please. We have seen also the efficiency of funding go down significantly. It's decreased drastically over the past 3 years. That's a really cool graph that I personally am very passionate about. We can transact on properties really, really quickly. We've seen properties fund in less than an hour, some even in as little as 25 minutes. More on that later. But the number of days it takes to fund a property has gone from 48 days for a property when we launched to around 12 days now. It depends on the value of the property, the attractiveness of the yield, the uniqueness of the deal. Some deals are in new areas where investors want to dive into. So some properties tend to fund in on average 12 days for this year. Next slide, please. Where do we offer properties? So for the time being, and there's been a few questions on the Q&A as well, we currently offer Dubai-ready residential real estate. We offer 20 prime neighborhoods. Some are, let's say, more prime than others, and more on that later, but there's basically 20 neighborhoods that we are confident will offer immediate gains on for the investors, and as well as long-term appreciation. So the value keeps on going. The reason why we go for prime locations and prime neighborhoods is because they're solid neighborhoods for investments. There's definitely a path for increased capital appreciation over the next few years, and that's the reason why we're very bullish on exclusively going into these neighborhoods. Next slide, please. This is where I'll spend a bit of time giving you some insights. So we continually grow, and we grow our presence in these prime locations. So 65% of our portfolio is within these areas that we're very bullish about. We've seen Dubai Marina and downtown Dubai continually grow, and our basically belief in these areas and our investors are very keen on these properties. We see them fund fairly quickly, and they are properties that offer a consistent yield, lower vacancy rates, and then eventually a high capital appreciation over time. So our top neighborhoods in terms of value of the properties funded are Dubai Marina, downtown Dubai, and DIFC. And for those of you that are not maybe familiar with Dubai, those are also the most prime neighborhoods, the ones that are most solid in terms of value appreciation and in terms of how they perform over time. I'll share with you an example. When I joined Stake about 2.5, close to 3 years ago now, we looked at a few properties in, for example, downtown Dubai, where one bedroom was hovering around 1 million dirhams. And now you see property values that are closer for a one bedroom to 1.6, 1.7 million dirhams. And those numbers just keep on increasing year on year. So that really backs our belief in those prime neighborhoods. Next up on the list is MBR City, commonly also known as Shoba Heartland, District 1, whatever you want to call it. It's an initiative by the government, by Nakheel, by Maidan, and by Dubai Properties, basically, where this is a neighborhood that we launched just under a year ago, and it's climbed steadily to the top of our list because of its close proximity to downtown Dubai, DIFC, and the quality of the builds there. I won't go into the other areas one by one, but I do want to give a few mentions to Dubai Hills that have been climbing up that list in terms of our presence there, our investors' interest, and that's one of the areas they keep on asking for properties to be listed. So that gives you kind of an overview of where the values of the neighborhoods that have transacted on Stake so far. Next slide, please. So in terms of property performance, or our portfolio's performance continually outperforms the market, looking at certain metrics like we're looking at here. So for example, the cost per square foot to rent an apartment in Dubai hovers around 90 dirhams per square foot as of April 2024. That's a range normally that goes between 80 and 100 dirhams per square foot. Now, it's an uncommon metric that's maybe not published in all the reports, but we do like to look at it in terms of the quality of the investment and the type of the value basically for the neighborhood and of the buildings that we select very carefully and very diligently. So far, our portfolio is situated in prime buildings, prime neighborhoods. We are very selective with our developers, with the quality of the build, with the age of the buildings, and with the locations. And that's why we've been able to drive an average cost per square foot for rent of 160 dirhams per square foot, which shows a very solid performance for across the market. In the graph, you can see area by area, the rental income per square foot for half one of this year. So we're just edging over the market for downtown Dubai. It's a very competitive market. It's highly desirable, and there's a lot of properties that have handed over in the past year, which basically has led the prices even higher because they're all prime buildings and prime all developed by Amar. So that has pushed the price per square foot up as well. DIFC continues to be one of our favorite neighborhoods, our investors' favorite as well. All the projects that have launched by the DIFC, by developers like H&H and certain hotels that are coming up online hopefully soon and getting handed over in the next few years, have driven the prices up. We're very bullish on buildings like Sky Gardens, the Liberty House, and Central Park, and Index Tower, and Burj Daman. Really solid residential towers that are very popular for people coming in for work and want to be close to the financial center. We're seeing also, if we look at Jumeirah Lake Towers, JLT, we're well over the market, and that is driven by our acquisition strategy. We basically are very selective because JLT is very diverse in terms of the quality of the buildings, and we're very selective as to which buildings we offer. So we're continually overperforming the market there, and we hope to continue as we partner up with our property managers and select the most suitable tenants for these properties. Same story for Dubai Marina. We are also selective with the buildings and the developers, and with Business Bay as well. They're also considered some of the most prime real estate in Dubai. There's a lot of spends into the infrastructure and into the development of the area, and that really shows with the performance of the general market, but also with our performance as well. Next slide, please. Yeah, so another metric that we're really into and we look at diligently is lifetime occupancy. So that's basically from the date a property is transferred to our investors. So our investors have now ownership, let's say, of that property for the entire lifetime of that property under stakes management, basically under the investment, under our investors' ownership. We look at what occupancy we've achieved, and so far we're hovering around 95% for our portfolio. That is made possible by us signing 86 new leases for the portfolio. 58% were leased above the forecasted rent at the time of listing. And what we mean by forecasted rent is the base number that we're looking to achieve for that specific property when we list it. It does also support a record lifetime occupancy for our portfolio, which is well above the market average. And that, again, is due to stringent selection criteria for these properties. You can see certain areas like Dubai Hills that are and DIFC that are really outperforming the market. I would like to put an asterisk here as well and say DIFC data is not publicly available, but this is using data from our partners at Reden and our partners in different property management and leasing agencies. And it currently hovers around 85% for the market. But with us, we're finding like if a tenant decides to leave by the end of this month, we'll probably have the property listed and leased within the next couple of weeks. DIFC is one of the better performing neighborhoods. Thank you. And then one thing I want to dive into now is our dividend payment. So as our portfolio grows and we add more properties to our management, dividends are paid out to our investors. We pay them normally at the end of every month. What we do is we have a mechanism to manage the cash flows for each property and each investment on its own. We deduct all the running costs. So that's your service charges, property management fees, property insurance, the SPV license registration on a yearly basis. And we deduct that from the rental income for every property. The balance there is basically the net rental income, which is going to be distributed to the investors at the end of every month. The reason why we do it at the end of every month is to manage any incoming payments from the tenants and for that property. So we've seen a steady growth over so this graph is actually really cool. It's done on a half yearly basis, and it's been really steadily growing every 6 months for the past 3 years. The number currently for every month hovers around 1.2 million dirhams, and we've paid out so far for the first 6 months of 2024, we've paid out 6.4 million dirhams almost in dividends. Now, I would like also to mention something for everyone here, and we'll touch on this in a second, but this rental income, the rental yield that is generated by a property and paid out to the investors, is a passive income that you're getting out of the property. The true potential of these investments lie in the capital appreciation of the property value over time. So if you buy in 2024 and then eventually sell in 2026, 27, or 2030, you're realizing the majority of your gain from that. And we'll touch more onto this in a second. Next slide, please. Great. So capital appreciation is where the long-term gain is for real estate, and it's the key component for the overall return on investment for real estate. So what we do here is we carry out a property valuation by a RICS certified or a RICS regulated valuator on the market. We've got a few that we select from and we work with. We make sure this independent valuation is done at the time of listing. It guides us on the property value and whether we're buying below or at the market value, never above. And then every 6 months for the ownership of that property, we carry out a desktop valuation and share it with the investors. This valuation helps them see if this property has appreciated in value and by how much. And it also in turn helps us keep keep a close grip on the market and see where the potential exit opportunities lie. Now, maybe a bit of insight into the valuation. Normally, it's heavily based on transactions, not just listing prices. So valuations may also be a bit conservative in some cases, where the transactions maybe have not caught up with the listings yet, but we find an adoption cycle of maybe 3 to 6 months in some cases. But with the current performance of the market, it's actually getting appreciating much quicker. Another insight here, sorry, if you could go back, actually. Another insight here is the market, based on extensive market studies we've done at the time of launch of Stake, on a yearly basis. However, some of the most prime neighborhoods that we have outperformed the market by a fair margin. So you've got DIFC, which is hovering around 11.5% annual property appreciation on the property value. Palm Jumeirah around 10.5%, and Dubai Marina around 8.6%. And the average across our portfolio is actually around 7.75%, which is already outperforming the projected appreciation of 6%, but we do like to be a bit more conservative. And one of our ethos as a real estate operations team is to underpromise and overdeliver, and always make sure to deliver the appreciation for our investors. Next slide, please. With that, and with the valuations that are done every 6 months, we're able to guide the investors and have a projected exit value for the property. So we do offer 2 exit opportunities. One of them, which Sarah touched on briefly earlier, is the exit windows. So they open every 6 months in May and November. They're open for 2 weeks, and it's essentially a marketplace where you can buy shares of previously funded properties, or you can sell your existing shares in a property at the latest market value. So you can even realize a gain on your investment after 1 year and exit at the latest valuation, which is done by our RICS regulated valuators every 6 months. Our most recent exit window, we've operated 3 of them so far, closed in May 2024, and it saw transactions traded worth more than 7 million dirhams. Our next one opens in November, and that will be any property that has been owned by over a year will be eligible for that exit window, and investors will hopefully be able to realize any early appreciation, and buyers will be able to secure shares in a property that's already under our management and we're already very familiar with its performance. The second option that we have, which is something that has been growing in the background at Stake, as our property portfolio becomes more mature and as properties enter their second and third and fourth year soon of ownership by our investors, what we do at this rate is look at the valuation, look at listings, speak with our agency partners. We've partnered up with a few of the top in the market, and then we list these properties or look at realizing an offer to sell for these properties. And once the returns make sense or are favorable and the offer is secured, we share that with our investors and they're invited to vote in favor of an exit. If the investors vote in favor of the exit, then we'll execute a Form F, which is a standard sale contract. We will look to transact as quickly as possible, obviously, but some developer requirements and some regulatory requirements mean that normally it takes between 4 to 8 weeks for an exit to be realized. Over the past year, we've successfully exited 7 properties. We've selected a few here that we wanted to share with you from half one of 2024. I'm personally very involved in these and very passionate about these because it allows investors to realize this early gain and to realize ROIs like the ones that you're seeing on the screen. So we've got first up Studio One in Dubai Marina. It's a studio apartment. It had it was owned by our investors for exactly 2 years. It was one of our first properties bought in Studio One. We have currently a portfolio of 6 properties, if I'm not mistaken, and it offered investors an annualized ROI of 13.4%. This is all in considering all transaction costs and the realized returns that they made. Another property, and I'll shamelessly plug our video, which we did recently with the help of the marketing team. This is a 3-bedroom apartment in Al Anbar Tower in the Dubai Marina. It was owned by our investors for just over 2 years. It was rented for the longest time, and then as soon as it became vacant, we looked at opportunities to sell and to rent, and we were pursuing both. And then eventually we managed to secure an offer to sell at 4.15 million dirhams. This is from an initial investment rate of or property purchase price of 3.3 million dirhams. So all in, it provided investors an opportunity for an annualized ROI of 9% or just over 9%. Really exciting performance there, especially for such a large property in the marina. The last one here that we wanted to highlight is the studio in Address Dubai Mall, which is a furnished hotel that was previously managed by the Address Hotel, and now it's managed by the Kempinski, if I'm not mistaken. It was operated as a holiday home for a while, and then after 31 months, we got an opportunity, and investors were able to realize an early exit at an annualized return on investment of 12.6%. Next slide, please. Great. So that kind of wraps up our portfolio performance. We also wanted to share a couple of new features that we've recently rolled out on our product. If you haven't checked it out yet, there's a learning hub that we've launched, and frankly, it's been a project that the marketing team and product team have worked on. It's really exciting, gives you insight into how we source our properties, your exit opportunities, how we vet our investors and our pipeline, and yeah, there's to watch with our co-founders, and they're really insightful and really informative. Another announcement that we did recently, just a few days ago on the 1st of August, we got the green light from the DIFC, or our regulator, the Dubai Financial Services Authority, to increase the annual limit for retail investors from $50,000 US to $100,000 US. And that basically allows people to invest more and expand their horizons and tap into this portfolio that we have. So we'll open it up now for questions, and we already have quite a few in the Q&A. Sarah and I will answer a few live. if you have any questions, please feel free to share them.
I'll take one here. So, is there a plan for Stake to own retail shops and offices? So yes, we do have plans to do commercial. We would really like to. The thing with commercial is it needs to be okayed by our regulator. So we're waiting on the green light from the DFSA on this one. Once we've got that, then we will most definitely be bringing commercial. You know, our goal is not just to have, you know, the residential property, but commercial is also really important to us. We think it's a fantastic investment, especially because it's the most difficult one for people to get access to. So yes, we are ready to do commercial once the regulator feels like it's an appropriate time to do so.
I'll answer one here. So there's an answer about how long will it take for an average exited property to transfer the funds to an investor's wallet. Basically, once you've voted in favor of executing or proceeding with a full transfer of a property, it depends really. The timelines depend on the property, on the developer, on the condition, if it's rented or not, and on the condition of the buyer. Are they a financed buyer, yes or no? And normally, I would say anywhere between 4 to 8 weeks. We'll be ready to distribute the funds. Obviously, we want to get that done as soon as possible. But when we share a vote for investors to confirm proceeding with an exit, we do share the timeline expected, which I would say on average is 6 weeks.
Another one here in regards to investing in other cities and in Abu Dhabi. So great news, we actually, Estate just closed a $14 million Series A funding round. And as part of that, we received investment from Saudi Aramco and Mubadala Sovereign Wealth Fund of Abu Dhabi. So we're definitely going to be looking towards trying to do other cities. We are really focused right now on what we're currently doing, but I think we definitely have our eyes on expanding to new cities, not just within this region, but internationally as well. But, you know, at Stake, we really try and maintain focus to make sure we deliver and then we expand. So keep your eyes out. There should be some exciting things coming in the next 6 months.
I'll answer one here. The ROI percentages shown in the presentation is before or after stake management fee deductions. So that is the full return on investment that we shared earlier for the examples of Address, Anbar, and Studio One. That includes all the fees that were charged, all the transaction costs for a sale. So, for example, your NOC fees or any fees that are associated, like an agency fee or whatever's there, plus as well as our exit fee, the stake exit fee. So those are the costs.
Just which are, you know, like on the stock exchange at Stake. You know, one day we dream. We're focused on sure we deliver really strong returns to our investors and focusing on that. But you know, we're 3 years old. We continue to grow, and never say never. There's also a question about payment via credit cards and the retail limit for investors. So the limit that we just showed on the screen is the investor limit for retail investors. So we have retail investors and professional investors. To be a professional investor on Stake, you need to prove you have a net worth of $1 million. The minute you do that, you can invest an unlimited amount every single year and pay with a credit card. For retail investors, credit cards are not allowed. This is because of the Dubai Financial Services Authority, our regulator. We can't accept credit card payments for retail investors. But that increase in allowances, you are allowed $50,000 per calendar year to invest. We have just increased that to $100,000 again because the regulator has allowed us to do so. So if you're a retail investor, you can now invest up to $100,000 per calendar year.
Thanks. There was a question I'm looking at. So how are you guys making any profit from this? We make money 3 ways. At the time of acquisition, we make a fee of 1.5%. And and during the management of a property, we make a fee of 0.5% of the property value, which is deducted from, or of your investment value, basically, which is deducted from your dividends. So that basically is your net income is basically after our fee. And then the third way is at the time of exit, we charge 2.5% of the exit as an incentive to sell the property.
Just one here in regards to, is there a way to automate monthly rental payments, monthly rental income to then reinvesting? So stay tuned for this year. We know this has been a really requested feature from investors to be able to reinvest automatically all of their income. Something we're working towards very soon. Another question I've just seen come up is there a way to invest in Stake via your partnership with Republic? So yes, we have formed a partnership with Republic. Republic is a large, also they fractionalize private investments into different businesses. They're based in the US and the UK. You can invest with us via Republic as well. If you're in the US, that is definitely an option for you. And one more question I had here is, who are your competitors in this type of business? Look, I think like we are, we're an investment platform. Real estate is our vehicle, but we allow people to invest. And I think that when you look at our competitors, that can be everything from people in the fractional ownership space, but also looking towards, stocks, crypto, and how other people make money. One thing I think is interesting, I mean, I'm sure we're all aware what's happening in the markets at the moment. Real estate net doesn't go to zero. Real estate is a tangible asset. And that's why we really believe in real estate as a strong vehicle for an investment platform.
Question that I'll take is regarding ownership documents for investors. So as soon as a property ownership is transferred to our investors, the title deed will show the name of the special purpose vehicle which is set up. So when a property is fully funded, we register a special purpose vehicle in the DIFC, whose purpose is basically to own the specific property. You will have shares into this SPV. You'll have a share certificate that mentions the number of shares that you have in that property, and that is available for you on the app. You'll also see the title deed showing the name of the special purpose vehicle, the SPV name, and that's also available for you on the app. And finally, you can check the DIFC public register, which shows the list of investors in a property. It does not show the share percentages for confidentiality reasons, but it does show your name and the fact that you're an owner in that property. There's another question which I'll answer really quickly. Can we address the holiday home occupancy rate? So looking at lifetime, not a specific month, we're hovering around 86%, close to 87% occupancy. We currently have 15 properties that are managed as a holiday home, and they're averaging around 86%.
So just looking at another one here asking about payment methods. Can we pay with Bitcoin or other tokens? Again, because we're a regulated entity by the DFSA, we can't accept crypto as a payment method at this time. Another question was on how much can I invest? So just reiterating again, for a retail investor, it's $100,000 every single year.
I'll take a question here, which is our criteria to sell a property, not on the exit window. So we carry out the valuation every 6 months. That figure from the external third-party valuation helps guide us on what we're able to achieve. If it's anywhere above the projected capital appreciation, so 6% per year, then we go to the market and we look to our partners to share basically a projected sale price. If that's favorable, we explore exit opportunities, and then we consider all the transaction costs that are implied and present that to the investors. Before we list, in some cases, we ask the investors for their consent to list actively and market actively a property on listing sites like Property Finder, Bayut, and so on the market. But we also do that in the background with our extensive broker network. The duration isn't necessarily an indication. If the property is achieved over, let's say, 12% or 13% capital appreciation on the value in the span of 2 years, then we can explore an exit opportunity. We don't have to wait for the 5-year recommended hold period in that case.
So another couple of questions here is, what's the difference between Sharia and standard investments? So yes, we are Sharia certified to offer Sharia compliant investments. Everything to date is Sharia compliant. What would make something non-Sharia compliant would be, for example, let's say we bring commercial to the platform and we invest in a commercial unit that sells alcohol. That would not be Sharia compliant. But if anybody's interested, if you go to your account on Stake on the app, you'll be able to toggle on it if you want to see only Sharia investments. You have the choice, but like I say, to date, there's been nothing that is not Sharia compliant for our investors. Another question here was about I've lost it 1 second, was about the properties in the UAE, apartments versus villas. So look, there's always more supply on the villa side, on the apartment side versus villas. Villas are about 10% of the overall inventory available. The question is there more potential for villas and townhouses than apartments? I think this really comes down to developer build stock quality. Now, villas, are definitely more expensive. We invest in villas as well, so we started to bring some more villas to the platform in areas such as the Springs and Arabian Ranches, because yes, we agree there is some definite potential for villas and townhouses, but also there is great potential for apartments, but they have to be with the right developer, the right quality, and that's why we're very selective on our acquisition. Another question here is just about there's talk of a recession coming. How will this impact the real estate in Dubai? Historically, if you actually look at previous recessions, usually when the rest of the world is suffering, Dubai does well. Which, with what's happening right now, I think honestly, it's not necessarily a negative thing for Dubai. I think linking back to the, millionaire migration, that is you can just see the correlation between the cities and countries people are moving from and where they're migrating to, that really spell out where Dubai can benefit. And I think, like I was saying earlier, you think why do millionaires buying luxury real estate impact me? It's more about what they bring to the economy, opening businesses, employing more people, and that's definitely where we see Dubai. So we are pegged, for anyone that's not interested, for anyone that isn't aware, we are the UAE dirham, we are pegged to the dollar as well. Typically Dubai does well during recession periods.
There's been a couple of questions about the exit window and essentially being able to sell a property, or when are you able to sell on an exit window? And the answer is you have to hold for at least 1 year, and then the next available exit window, you're able to sell your shares. You cannot sell your shares in the next upcoming exit window. You have to wait for at least a year. And then another question, I think, is on exited investments and showing the net appreciation, not the gross. Just to be clear here, so if you go on our platform, our app, or our website, you can see the net return on investment, or like the gross rent that's generated by a property. And then you can see each investor in each property is able to see their own return on investment rather than sharing it publicly. But then you can go on our social media pages and see where each property, what kind of return on investment it has achieved. Another question which I'll take is, how are we different than a REIT fund? So REITs are popular, are available in the market, but they don't offer you the option of choosing which property you're investing in. You're essentially investing into a fund. Whereas with Stake in Dubai, you're able to invest in ready residential properties. You're able to select if you want to put more money into the marina or DIFC or downtown or Dubai Hills and so on. You're able to select if you want to invest in a holiday home or a long-term rented property, a vacant one or a rented one, and so on. So we offer that chance to diversify and that opportunity to select from your side. Another question is making sure the SPV isn't on hold on a loan. I just want to reiterate that the SPVs are registered in the DIFC. The DIFC and its regulator, the Dubai Financial Services Authority, are some of the most stringent, if not the most, like, what's the word? Kind of heavy regulators on the market. That's why we are, or in the region specifically, that's one of the reasons why we're regulated by them. We want to give ourselves and our investors the security and the ease of knowing where they're investing in and where their funds are being held.
Another question here, who owns Stake? So Stake is a privately owned company founded by three founders, Rami, Manar, Ricardo. And then, like I say, we have backers from Saudi Aramco, Mubadala, Sovereign Wealth Fund of Abu Dhabi, MEVP, Middle East Venture Partners, which is one of the largest VCs here in the UAE as well. Another question in regards to London and Europe being part of the expansion plan. You know, we are a regulated business. We want to make sure that we're always compliant and a regulated entity. As and when we feel like it's the right time for us to expand out of this region, we definitely are looking towards other cities such as that. We are focused right now on really the Middle East, but there's definitely, you know, longer term plans for us to expand outside of the Middle East.
A question that we had about SPVs and who owns the SPV and who holds the majority. So just to clarify, Stake does not own any shares in the SPV. It does not own any shares in the property. The investors are who own the shares in that SPV, and there is a cap on an investor. So the minimum basically is 500 dirhams, but there's a maximum or a cap for each investor holding shares of 33% at most for a property. And that is because we want to be a democracy, or want to empower everyone to make decisions and hold the right to sell or lease or do whatever they want in a property. So it's a third, basically 33% per investor.
Just another question here regarding beneficiary in case of investor death. So if you reach out to your account manager through the sales team or through our customer support team via the app, they will be able to speak to you about that and sort that. And there's been another question in regards to being able to filter returns for tax purposes. Again, if you reach out to us, we can help you with that for tax return purposes.
Just sifting through, seeing.
So just one here on, again, do we plan to invest in high-end real estate such as hotels, hospitals, student housing, warehousing, and selling them fractionally? Again, because we are regulated, we can't do this currently. We can only do residential real estate, but we definitely want to focus on commercial as and when our regulator feels like it's an appropriate time to do so. Question here on who takes the sold shares in a full property exit. So if there is a full property exit, we would find the buyer for that property, and they would acquire all of the shares, and they would own it traditionally through a real estate means, through the title deed method. Another question here on the appreciation percentages that we shared. This is an annual appreciation for example, when we showed 24 months, that would have been the appreciation for 12 months of that holding period. Another question here, what's the average, sorry, I just finished this one, the average annual net yield. So we're performing at a 5.5% average net yield currently, and that is net yield to investors.
There's a question here about ready and rented listings. So rented listings are basically rented at the time of transfer, and they will be rented for at least 3 months after the transfer of ownership. Whereas a ready listing is basically a listing that's recently been handed over or that's been vacant, where we're planning on doing a bit of work on the property and making sure it's in the best shape and then renting it out as soon as possible. There is also a question. There's a funny question where investors want to push for regulator approval on commercial properties. I mean, believe us, the feedback has been overwhelming from our investors. Our teams have been in touch with several investors and users. And we've used that feedback to push, and hopefully that's something like that will help the regulator approve. But we will hopefully have a timeline soon. There is a question about brokers and referral links. You can reach out to us on contact@getstake.com, and we can be in touch with you. If you're a broker, it'll be the real estate team that deals with you. And if you want to refer us for leads, like there's different ways that we can work on this. So please be sure to reach out on contact@getstake.com for that.
Just on here on if there is a, oh, sorry, just disappeared. There was a question on short-term versus long-term properties in the estate portfolio, because there's good returns on short-term. So look, we do have some short-term properties available. There's definitely more landlords that switch to short-term, which is why we do focus, and we've seen strong returns in long-term. So we tend to focus more on long-term rentals, but we do still have some opportunity for short-term rentals as well.
I'll take one about vacant properties and maybe share a bit of information about our stake guarantee. So if a property is vacant after it's fully funded, what we've done as a company is provide a rental guarantee after 2 months. So let's say you've invested in a property this month and it's fully funded. There's any delays in getting it rented or getting it occupied or getting the ownership documents transferred, you will still get your income within 2 months. So this is a really cool feature that we've launched recently, and it just shows to what extent we believe in our selection and our portfolio. And we want to empower our investors to not be exposed to that risk. There's a question about exit fees and performance fees. I'll share more information on that. So at the time of sale, our exit fee is 2.5% on the sale value. So let's give the example of Anbar property, which was sold last month. It was sold for 4.15 million dirhams. So the 2.5% would be on the sale value. And then the performance fee of 7% would be on the delta between the purchase price and the sale price minus all the transaction costs. So if there's any agency commission or conveyancing fees that are charged, any pending payments to the developer and so on, that's deducted, and then we calculate our performance fee from that.
Just a question here on the exit windows. Somebody wanting to reinvest and buy more into the existing properties they own. Can you make it easy to navigate in the next exit window? Yes. So our exit windows, if you've been a stake investor for the last 3, you'll see that they change an incredible amount every single time. It's like an entire new product. The team work incredibly well on this. So we'll pass on that feedback and expect to see more changes in the exit window to improve the investor experience. Okay, we'll just take a couple more questions now. So in terms of appreciation, somebody asking about what the appreciation is. So as I mentioned, it's about a 5.5% net yield that we offer. Our current ROI, which includes the capital appreciation and the net yield, is averaging 10.5% over the previous 12 months. Is there any way for investors to push the regulator to approve commercial properties? No, but don't worry, we are on it. We have a fantastic VP of compliance who is always making sure we can do whatever to bring commercial. But rest assured, we're making movement there. So, we have to wait for the green light from the regulator. And as I mentioned, once they see fit, we will be bringing commercial to you. But currently, we can just offer the residential real estate.
There's a great question here about real estate professionals working around the clock, like hospitality and events professionals. To be honest with you, yes, our asset management, property management team is available, and at the on standby for tenants and making sure the properties are also in great shape. But that is one of the reasons we also outsource property management. We've partnered up with a few of the top property managers in the market to make sure that our properties are looked after, the tenants are looked after. We use the most data enabled and most advanced property managers to make sure everything is seamless, efficient, and scalable as well as we grow. It's not easy managing a portfolio of 235 properties, but we are quite bullish on managing them, and we have really good partners to make sure they manage them well for us. Question on that, sorry. Valuers or third-party valuers, are they companies or individuals? They are companies. We don't use individuals for valuations, definitely not. It is a requirement of the regulator that they are regulated by RICS in the UK, which is the Royal Institute of Chartered Surveyors. To get more information on who the valuers are, you can see the reports which are listed for each property. So each property will have its own report listed in the documents, and then you can see who's done the valuation and see a bit of information about them and what data points they used for that valuation.
A question here on when a property is rented, do you get paid the rent the next month when the transaction is closed? Yes, so it is when a property is vacant. That is when we may not pay the rental income, but we have introduced the rental guarantee now. So that means by the second month, even if there is not a tenant inside, we will be paying you rental income. So rest assured, our priority is making sure you get your rental income as soon as possible. Rented properties are always, the better properties for us in terms of making sure we pay you your rental income as soon as possible, but we have that rental guarantee in place now.
There's a question here on our preference in developers. We obviously do. We are very bullish on MR properties, for example, Ellington, Select Group. There's a few developers like Shoba as well, which we've recently brought to our platform. They've been hugely successful. Those are our top ones. Aldar, there's a question about Aldar there. Aldar's so far only done off-plan in Dubai, whereas they've done ready properties in Abu Dhabi. Once they launch in Dubai, we'll definitely be going for them. The quality is superb. We are very selective in the agents we work with, in the developers we work with, and in the ways we manage the properties as well. There's a question here on lease agreements running out or a tenant moving out and so on. We try to manage as much as possible in advance. There's a system by RERA, the real estate regulator in Dubai, by the DLD, which basically means that landlord and tenant have to agree 90 days prior to a tenancy contract expiring, have to agree on the renewed rate, and it's based on if there's any increases available. These are chosen by the regulator or dictated by the regulator. We'll typically reach out through our property managers about 110 to 120 days before the lease is up for renewal to figure out what the rate is, to figure out if they're renewing or not. And then we proactively list it if they want to leave, if they've decided to move out. And if they've decided to renew, then we make sure everything's sorted and done. Our end goal is to pay dividends on a monthly basis and not pause anything. But if there's any vacancy periods that arise, we try to minimize, but then we have to pause the rental income, and the platform is updated as such.
Okay, I think that's we've gone quite over time, almost by 10 minutes. So we've tried to answer as many questions as possible. If you reach out to us at contact@getstate.com if you've got any questions, or if you go via the app, you can message us in the chat box. But thank you so much for taking the time to stay with us for a good hour this evening. We hope you've enjoyed the walkthrough of the portfolio. We do webinars every single month. We will do AMA sessions, new features, report overviews. So make sure you have the app on your phone to stay up to date with all of the upcoming webinars. And as mentioned, make sure you check out the State Academy on the app. You can see all of the videos to give you a walkthrough on how State works. And until next time, thank you so much.
Thank you for joining.